welcome to the Token Metrics. So we're going to go through and look at the changes in the market using the Token Metrics platform. The market indicator, where I like to start, has changed to bearish. So if we zoom in here, right, you will notice that there's been some back and forth, right? So basically it was bullish, then bearish, bullish, bearish, bullish, bearish. If you just look at this, you might think, okay, we're going from risk on to risk off. That's the way I like to view it. So while this can say bullish, this does not mean we're necessarily in a full-on bull market. And the same can be said when it goes to bearish. This does not mean that we're in a full-on bear market. However, it does mean that you should change your strategy in terms of how you're investing or trading the market. That's the way I like to view it. Even though it's bearish right now, the market is still green, right? So if we go here, our bull and bear is pretty high, 74%. And if we go to the breakout strategy and low frequency trend strategy, over 90% says bullish. So how do you decipher the two? So the way I view it is we're now basically in a risk off environment. This means that it's time to hedge. It's time to take profits if you're up on any trades or investments. If you go to the indices, our indices are basically triggered based on the market indicator. These are the changes we've made in the last, I would say, 6 months or so, especially post FTX. If you go to the indices now, you notice that although they're still trying to recover from the whole FTX crash, but with the changes we've made, they're now allocating more capital towards stablecoins. So if we go to the All Exchanges Daily Index, for example, over half of it, right, 18% is in Tether, 18% is in USDC, and 18% is in BUSD. So basically, 54% is in stablecoins. So whatever coins it was trading during this run-up is basically now hedging and putting half the portfolio in stablecoins, essentially taking profits on anything that has gone up, but also still being in the market. Prior to the market indicator, so when the market indicator was bullish, it was basically pretty much all in on the market. And now so what happens is the indices are triggered to be risk on, risk off. So in a risk on environment, it's primarily in the market, in altcoins, crypto market, Bitcoin, what have you. Once it goes to bearish, it basically starts taking the percentage of coins that are bullish and bearish and starts allocating to stablecoin based on that threshold. Right now it's bearish. It's began to allocate some capital to stablecoins. And if this keeps on going lower, the amount of capital it allocates to stablecoins will go even higher. So meaning that basically right now it's about half in stablecoins. If this were to go down all the way to basically 20% or lower, about 80% or more will be in stablecoins, maybe even 90%. I think the highest we've had is like 95%. That threshold is triggered based on the market being bearish or bullish, being risk on, risk off, and the percentage of grades that are bullish. With that being said, basically right now we're in a risk off environment, but we can still be in the market. Just want to kind of put that out there. So as we see here, we're still in Bitcoin season. We're not fully yet in altcoin season, which is to me really the actual bull market, but it could also be viewed as the top, right? And if we go down here, same sectors as last time, we have derivatives, L1s. I see Canto's up, exchange-based tokens, gaming, metaverse, NFTs, top movers, sync. Not really seeing anything noteworthy. Looks like some meme coins or something like that. And then in terms of, yeah, I see SafePal and BitGert, but I haven't heard of those.